Ladies and gentlemen, esteemed guest, and our cherished RPAG community, welcome to a very special February edition of the RPAG Scoop. As we gather today, we not only celebrate the love that fills our hearts on this romantic month, but also the passion that we share for staying at the forefront of industry knowledge. This Valentine holiday is traditionally held for expressing affection and appreciation for those we hold dear. But today, we extend that sentiment to our speakers who, like Cupid, are here to shoot arrows of wisdom and insights into the hearts of our retirement planning universe. Each presenter brings a unique bouquet of knowledge carefully curated for you, our audience, to ensure that your journey in the realm of retirement planning is fruitful and as fulfilling as any romantic adventure. So whether you're in the early stages of your retirement planning relationships or seeking to rekindle the flame of financial success, our speakers are here to guide you through the intricacies of our industry, much like experienced relationship counselors for your financial business future. Love is in the details, and speaking of details, our VP of Institutional Clients and Member Relationships, Jeff Cheshire, has some exciting news about our PAG's upcoming summits. If you're passionate about staying up to date in the industry, you won't want to miss this and what he's about to reveal. And here's a hint: it involves reservations, rooms, and a special new milestone program.
Well, hello, and welcome to this month's edition of the RPAG Scoop. As the title here would imply, we are in February and the month of Valentine's. So fellas, let this be your first reminder. Don't wait. It's better to do it now. Just get it taken care of. Nobody wants to be part of the February 13th, February 14th crunch in the grocery store with all the other guys who just put things off too long. Go ahead and take care of it. So let's jump into what we've got to talk about this month. The most important thing that we want to make sure that everyone is able to see is that we have our regional summits coming up. Registration emails have gone out. And if you've ever been part of the group that waited just a little too long, thought you had plenty of time to register for your room at the Ritz-Carlton for our national conference, and then realized, they're out of rooms. That happens at the regional summits as well. So go ahead and not only register, but if you're going to be staying at one of our hotels, go ahead and make those reservations soon. And I noticed that, my head's not in Mississippi, as ZZ Top might say, but it's in Chicago. So I want to get out of the way. April 22nd to the 23rd at the Bean there in Chicago. What's more shiny, the Bean or my head? Be there. Great time. We usually get started around lunch on day one, have a wonderful afternoon of content, have a group event, and then we get together for the first half of day two. And there's usually bonus time a little bit after lunch on day two. So please plan to come, engage, get to know your peers, ask questions. One of the most popular questions I receive is, well, who is this for? Is it for more salespeople, or is it more for support team? Is it for the new folks, or is it for seasoned RPAG members? And the answer is yes. We try real hard to develop content that will appeal to all audiences. So please join us. We can't wait to see you here. Now, what is this picture? It's like a path to the beach on a rock. Has Cheshire lost it? Well, that's a dangerous question to ask always, because I don't think I ever found it. But this is to promote our new Milestones program. So this is for anyone who is a new member or a new employee of a member firm, or maybe an existing employee who is just now beginning to work with the RPAG resources. We have designed this engagement to be able to meet you where you are in your knowledge of the existing RPAG tools and resources, whether that is if this is your first time and you're really just trying to figure out where everything is and what is there, or if you've spent all of your time on one or two resources and would like an audit of our system and just see what all is out there. This is a series, again, of engagements designed to show you where everything is, what the reports are, talk to you about them, where the training resources are, and to make sure that you've got a good handle on what is available to you, because our goal at RPAG is for you to extract the maximum amount of value for your investment in our system. So we want to meet you wherever you are to make sure you know what's out there and how to get the most use out of it. And now, some updates from our custom solutions team. We have recently launched the American Fund TDF CITs within both Principal and One America. So any plans that you're placing with these two partners, you now have the American Fund suite of CITs available. And these mirror the options that are available within Empower and Voya. So if you've ever worked within the Empower and Voya systems to use the American Fund TDF CITs, it should look very familiar to you. And speaking of Empower, what is the opposite of outgo? Well, unfortunately, I'm not at liberty to really answer that question or talk too much more about it, but we wanted to give you a little teaser of something good that's on its way. We'll have more information for you soon on that. So, who knows what this is a picture of? The Lincoln-Douglas debate, widely regarded, at least until now, as the greatest debate in history. But no, it is not still the king of the debates. It has been replaced by a debate between our very own Matt Giovinazzo and Kellen Foley. What are they debating, you may ask? Well, that's a great question. They have three topics. There is the passive versus active TDF. That is something that has been spoken about quite a bit. You will get Matt and Kellen's take on that particular topic. One I am hearing all over the industry. It seems I can't get to a meeting without someone arguing about the managed accounts, the TDFs, what is the best bang for the buck. It's not necessarily a question of what is more customized, but for what you pay for each option, what is the value that is received, particularly by rank and file employees. So Matt and Kellen spend several minutes talking about that, as well as income within TDFs. That's a new hot topic and is a conundrum. Interested to hear what they have to say on that. And where can you see this? Not on pay-per-view. Unfortunately, the pay-per-view slots have all sold out. But if you go to the website, and I've got the address typed in there, and make sure you can read all of it, type that in. Go ahead and pause this if you need to write it in. That will take you directly to the video, and you can take a look. So again, I'm going to wrap up my time here. We really want you to be at the San Diego, Philadelphia, Atlanta, and or Chicago meetings. Every now and then we have someone who tries to make all four, and we would love for you to do that, but at least come to one. As Uma Thurman says in one of my favorite movies of all times, don't be a square, show up. Thank you for your membership. If there's ever anything we can do to help make sure that you're getting the most value for your investment in the RPAG ecosystem, give us a call. The easiest thing in the world to do is to shoot an email to support@rpag.com, and we'll get right back with you. Other than that, look forward to seeing you at one of our regional summits. Thank you. Bye-bye.
Round of applause for Jeff Cheshire. You truly set the stage for a love affair with industry knowledge. Don't forget that we will be in attendance at the Napa 401k Summit in Nashville, happening April 7th through the 9th. Jeff and I will both be in attendance at booth 209, and we cannot wait to see you all. And speaking of Jeff's, get ready to fall head over heels with financial insights as our Chief Investment Officer, Jeff Elvander, takes you on a roller coaster through 2023 market trends. Brace yourself for the Magnificent Seven stocks, potential risks, and a sneak peek into what 2024 has in store.
Welcome, everyone, to our investment scoop titled Q4 M7 and 130. And really just wanted to cover the markets as of the end of last year and look at what's been going on in January. As the saying goes, as January goes, so does the year. So let's get into it quickly. And for those of you that have covered the market review in an earlier recording, really just want to hit on some of those same points, but in a more abbreviated fashion. And here was just looking at how the markets finished up over 2023. U.S. equity really leading the way at 26%. Great performance there. That was really in large part driven by the Mag 7, M7, or the Magnificent 7 in those stocks, which we'll look at in a little bit. International equities, they do not have a Magnificent 7 pair of stocks. They were up only 15.6% for the year, but still strong performance. And a lot of that was just rate driven or rate expectation driven in terms of what we're going to see potentially in 2024. And certainly that helped the U.S. markets too. You'll see the fourth quarter numbers were really strong and helped propel both of the equity markets, U.S. and international, higher for the year, but certainly for the quarter as well. In fixed income, we saw that flat to negative performance for the year when we were finishing up the third quarter, swing positive for 2023. And that was really attributable to what we saw in the quarter. Rates declined. Those markets went up. As rates decline, the market value of all of those securities increase. For the quarter, 6.8%. Really strong performance in the fixed income markets for the quarter. That helped them bring them to a positive 5.5% for the year. So let's look at some of those in a little more detail. In the U.S. equity markets, if you look at the top right-hand chart, growth really leading the way. Over this quarter, a lot of people were looking forward to 2024 and what potentially would happen. And a lot of that expectation was for rates to decline, and that propelled the U.S. equity markets and the international markets to some extent, I believe. It also helped some different parts of the different sectors of the markets. And you'll see if you look at the bottom sector chart here, sector performance for the quarter, real estate was the best performing at 18.2, a lot because of the rate expectations. The next best performer, no surprise, information technology, that has a lot of those magnificent 7 stocks, which are tech companies. And really information technology, you'll see if you look at the year to date at 56.5%, was really the standout for the year. The international markets that don't have the Magnificent Seven, of course, did not perform as well. Developed markets really led the way versus emerging markets. Emerging markets is not a core asset class per se. We like getting some of that emerging market exposure, or prefer getting that emerging market exposure through either a broad-based index like the ACWI, XUS, or an active manager. You'll see for the latest 3-year period, that's really the only segment part of the international markets that remains negative at a negative 5.1% over the last 3 years. Certainly, they are the most impacted in a high rate environment, which is what we've been in. And they will be the last to swing back around. But of course, now with the expectations for 2024, that asset class could take off as well. But no surprise here. And for the quarter, 12.7% in large cap growth. So growth stocks led the way for the quarter. A little different though, you'll see that between value and growth for the year, interestingly enough, large value is the best performing at 19.7 versus 17.7. So interesting to see in the international markets really a more fair and balanced spread of performance across the different styles. Fixed income markets, looking at that top right-hand chart, that's the most interesting to me, is the yield curve and where we were a year ago, which is denoted by the turquoise line, and where we are today, that orange line. The yield curve is really essentially flat or inverted. I know we've spent a lot of time on that in the past with regards to inverted yield curves and predicting, I believe it's something like 10 out of the last 6 recessions. Of course, that is a joke. It doesn't have full predictive power. Rates did come back down, again, with a lot of those expectations that the Fed, which really controls the short end of the curve, is going to bring rates down at the short end in 2024, normalizing this curve. And as we head into the year, the Fed is really currently meeting now at the end of January. A lot of eyes will be pinned on them. So quickly at our kaleidoscope, this is a fun chart speaking to diversification, which is denoted by that yellow box, the balanced strategy, which has a slice of U.S., international, and fixed income plus cash. 2023, large growth led the way. They were the worst performing asset class in 2022. No surprise, and maybe not so much surprising as commodities led in 2022. They were the worst performing asset class in 2023 at down 7.91. Really, again, because inflation now looks to be coming under control. That is really the first asset class that reacts to inflationary numbers in a big way. And as that comes down, certainly commodities will experience lesser performance, in fact, negative as well. The M7 represents the Magnificent Seven. And if you don't know who the Magnificent Seven is or who they are in the media all the time now, in your paper, on the internet. Those are the stocks Apple, Amazon, Alphabet, Microsoft, Meta, Nvidia, and Tesla, leading really the US markets in 2024. This chart speaks to market cap weighted indices, specifically in this example showing the S&P 500 index, which is a market cap weighted index, as most are, and showing that the concentration now for these 7 largest companies is almost a third of that entire index. And it just alludes to the extent that these stocks have done well. There's certainly some great companies in here, and that they have led the way in outperformance. They have gotten to be a very large part of the S&P 500 index, including other U.S. large cap indices such as the Russell 1000. And there's a number of other market cap indices, large cap indices out there as well. They are a large amount. This index concentration is a risk as we look forward to 2024. Really, these 7 stocks are going to continue to be a driver, not only on the upside that we saw, but potentially on the downside as well, because they do represent such a large chunk of the index. These move down, these could hurt the US equity markets, even if there is maybe a more even shake rally or more balanced rally across all of those other 493 stocks, for example, in the S&P 500. These stocks really, I think, as these stocks go in 2024, the U.S. equity markets probably go. On a side note, maybe a good time to have some active management in the large cap area where managers can underweight these stocks. Last but not least, 130. This is our market update in January. The saying goes, as January goes, so do the markets for the year. U.S. equities finished up 2.83%. Well, as of 1:30, we've got, as of this recording, one more day. So it looks like the markets are going to finish up, at least U.S. equities. This continues to be driven by the Magnificent Seven. Specifically, when you look at style, large cap growth leading the way at 4.7% for the year. Interestingly enough, in the international markets, with no Magnificent Seven stocks to lift them up, those equity markets, those risk assets are down 1.3% for the year. So a little mixed bag in equities. In fixed income, we are seeing rates inch back up. And so the ag now has started the year negative so far through 130, down 0.73%. It's going to be an interesting year with the Fed now looking at the data, really having taken a pause to see what they are going to do. Market expectations are for rates to lower. It'll be interesting to see, of course, what the Fed does as we go, and if those expectations really are well placed. Certainly at this point in time, inflation numbers are still relatively high. Thanks for tuning in to our market update and our investment scoop, and we'll see you next time. Thanks, everyone. Bye.
Bravo, Jeff. Your deep dive into market trends has left us on the edge of our seats. Your insights are like a love letter to financial wisdom. Thank you for sharing the Magnificent Seven and adding on the extra tidbit for January's market. We are smitten with your expertise. Now in matters of the heart, or should I say the wallet, Nuveen's Brendan McCarthy is about to share the secret to a financially secure retirement. Lifelong income and accumulation take center stage, and Brendan has the key to unlocking their importance in the 401k market. Get ready to discover why TIAA Nuveen is not just an investment partner, but a lifelong companion for your financial journey.
I just want to start off by saying how grateful we are for the partnership with RPAG FlexPath. And we're super excited as lifetime income and decumulation start to become a focus in the 401k market. We're just really excited that both firms are so aligned on the importance of that. So we're really looking forward to some of the things that, number one, just building off some of the leverage and momentum that we already have on the 403B side with the flex income solution, but the potential to do something in the 401k market as those solutions get added to record keepers, which we expect this year. I think you're going to start to see a lot of the 401k record keepers start to add lifetime income solutions for the 401k market. So as it occurs, we're just really excited for the opportunity to partner with RPAG FlexPath. I just want a couple of things about TIAA Nuveen. TIAA is the largest U.S. insurer based on AUM. We've got the largest annuity general account. We actually have the largest amount of statutory capital, 52 billion in statutory capital. It's actually 5 times the government required amount of statutory capital. But I think what makes us most unique is the fact that we're actually structured as a not-for-profit company, meaning that when we don't use that 52 billion, we don't have to dip into that statutory capital. We actually return that to those who annuitize with us in the form of a higher rate. And that's, those of you who are familiar with our products, that's known as our TIAA loyalty bonus program. And that can, offer, it's good on 2 fronts. Number one, it offers a potential for some of the highest rates out there in the industry for annuities, for fixed income annuities. Additionally, it leads to sticky assets because, individuals, see this once they've been in this product for a while, the longer they're in it through the accumulation phase, the higher the potential rate they're earning at retirement, should they choose to annuitize. So it's something, even though our fixed income annuity is fully liquid, it's something they don't want to walk away from. But I think, one of our greatest benefits as these products go to market in partnership with RPAG FlexPath is just that they're simple. We design our guaranteed income, our annuities. They can be complex to people, but we design them so that they embed inside of a product that they're already familiar with. That being, something such as the FlexPath solution. So it embeds inside and it enables that product to offer that option of guaranteed income at retirement. And the last benefit I'll just talk about is, and you're probably all aware of this, our fixed income annuity has no explicit cost. So this is not a complex, expensive annuity. This is a simple, low cost. In fact, there's no explicit cost on this. So it's not going to make the plan more expensive. In fact, it can actually lower the overall expense ratio, investment expense ratio for a solution. So again, just thank you. We hope to be doing a lot more with you in the future. I know we've got a lot going on in the 403B side, but our excitement is the even larger 401k market and working with RPAG FlexPath. I would encourage everyone, please reach out to my team, it's Nuveen Retirement Investing. That's our DCIO team. You can find us out there at Nuveen/retirement. And if I can be of any help at any point, please don't hesitate to reach out. Thank you.
A standing ovation for Brendan McCarthy. Your points on lifetime income and Nuveen's financial offerings has warmed our hearts. He showed us that planning for retirement can be as sweet as a box of chocolates. But moving on, love is in the air, and so is success at Transamerica. Listen to Darren Zeno, the maestro behind Transamerica's retirement plan sales, as he unveils the magic that happens when you bring together the right people. It's not just about assets and cases, it's about culture that believes in your financial goals. Get ready for a love story between Transamerica, its teams, and success.
Hi there. My name is Darren Zeno. I am the U.S. Managing Director for Retirement Plan Sales here at Transamerica. Wanted to take a minute to introduce myself and just give you a little bit of a highlight of what we have going on over here going into 24. So I can't do that without talking about last week. Last week, we had our national sales meeting where all of Transamerica got together in Orlando. Uh, but it was a special year for our retirement group. Obviously, at a national sales meeting, part of it is planning out 24 and what that's going to look like, and goals and aspirations. But part of it is really celebrating the year prior. And for us in U.S. retirement sales, I've been here 12 years. It was a record-setting year for us in assets and in cases. And I'm very proud of the team and everything we accomplished last year. And I think there's a couple different reasons. People ask me why that happened. Number one, obviously, there's a lot of interest and a lot of success, both at our shop and other shops in the pooled area, whether that be PEPs, MEPs, groups of plans. There's a lot of excitement around that, and obviously, being a leader in that, that's very helpful. But if you look at our other lines of business, where other verticals where we have strength, everything really performed to the degree we wanted it to last year. But I think it really comes down to our people, and it's something we really highlighted throughout the meeting. But I'll tell you, I think in an industry where I think the people think they can just kind of put people in spots, and the machine is big enough now where it's going to produce the number of cases and assets we want, and it really doesn't matter as much who's where. As long as I'm in this chair here at Transamerica, I will tell you there's nothing more important to us than the people we have that have believed in our culture and what we're trying to do. And I think when you look at the success of last year and you look at the people individually running their franchises in their markets, you'd be hard pressed to tell me that there's not a correlation between those two things. I truly believe that makes a difference. So I would say to you is this, I feel like, we've got some good wind behind us. We've got, good momentum. If you are working with us today currently, I thank you for that. And the team thanks you for that. If you haven't looked at us recently, I would tell you to take another look. Coming out of last year and going into this year, I think we've got good momentum. And I think, we'd love to help you in a situation where you think we would make sense to partner going forward. So I'll leave you with that. Happy New Year and best of luck in 24.
Thank you so much, Darren. Your insights into Transamerica's success and the power of a fantastic team have left us inspired. Darren, you've proved that in the world of retirement planning, there's no greater love story than the one between a company, its culture, and success. As we draw the curtains on a lovely edition of the RPAG Scoop, we want to express our deepest gratitude to all of our speakers and to our audience. Thank you for spending this cherished time with us. We hope that the knowledge that you learned here today becomes a lasting companion on your business journey, much like a steadfast partner in life. From all of us here at RPAG, we are wishing you a very fantastic February, a loving Valentine's Day, and here's to a future brimming with financial success. Until we meet again, take care and keep the flame of knowledge burning bright.